Assalamualaikum, my name is Siti Syafiqah from JAC1105A. Today I will introduce the topic of audit expectation gap or AEG. Audit expectation gap is the difference between what public expect auditor to do or what public auditor are actually responsible for doing. The concept was first introduced by Ligo in 1974 and later expanded by Porter in 1993. Many people expect auditor to detect all fraud and errors, but this is not always part of their responsibilities. Because of this misunderstanding, a gap can exist between auditors and users of financial statement. Auditor expectation gap is an important issue, but it can affect public trust and in auditors and financial reporting. One of the key issues in audit expectation gap is auditor performance. Auditor performance gap happens when auditors do not perform their duties according to professional standard. Poor performance can reduce the quality and reliability of audit work. Porter 1993 states that auditor performance is one of the causes of expectation gap. When auditor fail to meet expected standard, the public may lose trust in the auditing profession. As a result, the gap between public expectation and actual audit performance become larger.
Hi, my name is Alia Farisha. Next is unrealistic expectations. Unrealistic expectations occur when the users of financial statement or stakeholders expect more or too high on auditors to perform their duties. Most of them thought that auditors can find and identify the errors and fraud in the company. In reality, some errors and fraud are very difficult to identify because accounting information can be complex and sometimes intentionally hidden. In addition, auditors do not examine every single transaction. They usually use a sample of the population and test only selected records as audit evidence. Because of this limitation, auditors can only provide reasonable assurance, not a guarantee that all mistakes or fraud will be found. As a result, when problems are discovered later, the public may think that the auditors failed to do their job, which creates the audit expectation gap. Lastly is public misunderstanding of the audit function. Many people do not clearly understand the different responsibilities of management and auditors. For example, management is responsible for preparing the financial statements and ensuring that the information is accurate and complete. On the other hand, auditors are responsible for examining the financial statements and giving an independent opinion on them. They do not prepare the accounts themselves. When stakeholders misunderstand those rules, they may blame auditors for issues that are actually management's responsibility. This misunderstanding increases the gap between what the public expects auditors to do and what auditors are actually required to do.
My name is Nur Khadijah Nasuha. So for this slide, we will discuss the analysis and evaluation of the audit expectation gap. Let's look at the cause of this gap. One of the main reasons is that the public often expect auditors to detect all fraud in the company. They assume that auditors will be able to find every single mistake or hidden fraud. However, in reality, auditing involves testing and sampling, so it's not possible to guarantee that all fraud will be detected. Another cause is misunderstanding of auditors' responsibility. Many people think auditors are responsible for preventing a company from failing. In fact, auditors are only responsible for giving an opinion on whether the financial statements are fairly presented. In addition, communication between auditor and society also contribute to this gap. Audit reports are often technical and difficult for the public to fully understand and create confusion about the actual role of auditors. Next, audit standards are important because they provide clear guidance for auditors in performing their duties. They ensure that audits are carried out in a consistent and professional manner. At the same time, they help improve audit quality and reduce misunderstanding about what auditors are required to do. Moving on the comparison perspective, auditors understand that their responsibility is to provide reasonable assurance only, not absolute assurance. On the other hand, the public tends to expect complete fraud detection and also believe auditors can prevent company failure. Lastly, in the terms of evaluation, auditing standards have several strengths. They help improve professionalism in auditing and increase public confidence in financial reporting. However, there are also weaknesses. It is difficult to completely eliminate the expectation gap because public expectation continue to increase.
My name is Marisa Safia. Today, I would like to explain about strategies to reduce the audit expectation gap and the role of audit communication. First, there are several strategies that can help reduce the expectation gap. One of the strategies is education and training. This helps the public understand the real responsibility of auditors and how the auditing process works. Besides that, better communication with user is also important because auditors need to explain audit findings and more clearly to avoid confusion. Another strategy is expanded audit report. More detailed audit report can help us better understand the company financial condition and the auditor's work. In addition, stronger audit regulation can improve audit quality and increase public confidence in financial reporting. Next, audit communication plays an important role in reducing the expectation gap. Good communication helps user understand the limitation of an audit because auditors cannot guarantee that financial statements are completely free from errors or fraud. It also improves understanding of audit report and reduces misunderstanding between auditors and the public. There are also different perspectives between auditors and the public. Auditors believe the current audit standards are already sufficient and they focus on complying with regulation. They also see audit limitation as a normal part of the auditing process. However, the public expect clear audit report, higher auditor responsibility, and easier understanding of financial report. Lastly, the audit expectation gap has both strength and weakness. Its strength is that it encourages improvement in audit quality and support stronger regulation and transparency. However, education cannot reach all the stakeholders. Different users have different expectations and the expectation gap still exists in many countries.
My name is Nurin Batasha binti Muhammad Ayub. For conclusion, expectation gap in audit exists because there is difference between what the public expects auditors to do and what auditors are actually responsible for during an audit. This can happen because many people do not fully understand the role, responsibilities, and limitations of auditors. As a result, some people expect auditors to detect all fraud and errors, which is not always possible. The audit expectation gap cannot be completely eliminated. It can be reduced through better public education, clearer audit reports, effective communication, and higher audit quality. By reducing this gap, public trust and confidence in auditing profession can be improved. Next is recommendation for expectation gap in audit. First, increase public knowledge about auditing. Many people do not fully understand what auditors can and cannot do during an audit. Therefore, more awareness and education should be provided to help the public understand the actual role of auditors. Second is clear audit communication. Audit reports should be written in clear and simple ways so that users can easily understand the audit result and important information. Finally, provide continuous training and use new technology. Auditors should continue to improve their skills and knowledge through training. They should also use new technologies to improve audit quality, efficiency, and public trust.